Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 14th of December. It looks as though we've got liftoff. We've broken through that February resistance line there at 76.40. Above that, we were looking for a best case scenario end of December target up to 7,800, which now looks actually almost pessimistic. And obviously after that, we've got the old April resistance area around 7,900. But the big breakout here at 76.40, and that actually, if you look back at the chart of the last 15, 16 years, you can see that we're in a rising trend channel. Top of that channel heading for 8,500, which obviously would be very nice sometime during 2024. But the key here is to hold above 76.40 and also remain above the 200-day moving average at 75.63. The fact that we're above that is also a bonus. But at the moment, the most on the downside is seen as being around that 200-day line. Moving on to the DAX, which has obviously done rather better than the FTSE over the recent past, up at year highs and much more. We hit our initial target there, 16,900, and we were looking for a best case scenario target up to 17,800 by the end of next month. Obviously, the way things are going, we might even get that by the end of this month. The 50 and 200-day lines going into Golden Cross, probably only about a week away from that now, and obviously, as we've seen, the run up to a Golden Cross tends to be the strongest part in the cycle. On the downside, probably not looking at more than 16,600, the old resistance area from back in the summer. Moving on to the Dow, and here the market's also exceeded expectations. We were looking for that red resistance line there from March up to 37,800 by the end of next month. The way things are going, it looks as though we could get that by the end of this month. Like to see this market stay above the resistance from earlier in the week around 36,600 ahead of a potential move to 37,800. So really flying at the moment. Next up is Bitcoin, which has had a bit of a wobble at the beginning of the week, but has now proved that that rising trend channel, which I drew a week or so ago, is actually valid. The floor of the channel there around 41,000. Below 41,000 is the risk of 39,000, 38,000, the old pre-breakout resistance area, but ideally we stay above the 41,000 level, and we're looking for 50,000 plus by the end of next month at that October resistance line projection. Lots of shenanigans going on in gold of late, but at least the market has been trying to stabilize at and above the $2,000 level. We've got the 50 and 200-day moving averages in the 1970 area, but the 50-day line 1977, and it's good to see a key reversal to the upside for this market yesterday above that 50-day line. A rebound above a major moving average tends to be a good continuation signal. So hopefully that little dip below 2,000 this week was the last one we'll have for a while. And then we can head back up to the initial resistance there, 2060, and then up to the resistance line projection from back in June, which is promising us as high as 2180 by the end of next month. Moving on to the stocks, and starting off with Angle again, and here you can see that just looks as though we're near the bottom of the range here, potential inverted head and shoulders, i.e. we had the low there back in October and then a higher low versus November for December. We can stay above 10 pence, then looking for 13 pence plus by the end of this month, and then hopefully up to the 200-day moving average area at 16 pence by the end of next month. If you're cautious, wait for a proper end-of-day close back above the 50-day moving average at 11.5 pence. Good to see Audioboom still keeping the faith in terms of recovery. Still want to see it on the right side of that 200-day moving average around the £2.50 level. The last time we were up there was back in the summer of last year, so it would be quite a trend change to get up and stay above the 200-day moving average near term. If we can do that, initial target up to £2.80 by the end of this month. I think that seems reasonably fair. On to a stock which I've hardly ever looked at all, and it is Base Resources. But here, unfilled gap to the upside off the low, which is normally a significant thing to happen. And the first target here up to the 50-day line at 7 pence. Ideally, we can fill the gap up to 8 3/4 pence from October by the end of this month. ultimately 10 pence during January would be much appreciated. One of the stocks which seems to be buzzing on both a fundamental and a technical basis at the moment is Cornerstone. I think I covered it quite a lot of late. Initial target here was 20 pence, above 20 pence. We've been looking for 28 pence, and it looks as though we'll get that by the end of this month. 50 and 200-day lines rising very nicely at the moment, and hopefully that will deliver after that unfilled gap to the upside off the lows back at the turn of the month. Next up, a rather different stock than normally appears here. Here we've got Ceres Power, where it looks as though we're in a broadening triangle base, top of that triangle heading for £2.40. And the reason for inclusion today is that we've had an unfilled gap to the upside off the low, which tends to be a reliable signal, especially after that bull shakeout that we had at the beginning of the month. The view now is that the longer we stay above the floor of the gap there at £1.70, the greater the chance of 240 by the end of next month. And we've also got an uptrend line in the RSI window. Couldn't resist covering Eurasia today. It seems to have settled its latest issue. We have had the bear trap below the 1.5 pence level to start December, and we've also, on yesterday's close, which obviously was guessing what would happen today, at 1.95, closing that gap, and above 1.95, looking for the legendary 3 pence area over the next week or two, maybe by the end of this month. But the upside valid only while we remain above the 2 pence area on Eurasia. Next up is a stock which is going from strength to strength, obviously because it's big in crypto, and that is KR1, one of the giants of the Aquis market. Here you can see that managed to get up to our initial target there around 75 pence, and then found support above it. Above 75, we're looking for £1.20 as soon as the end of next month, or hopefully a bit sooner than that, given the way that the crypto world seems to be improving at the moment. We had the golden cross there in the middle of last month. Next up, another stock which has creating a bit of a buzz at the moment, MusicMagpie, and here unfilled gap off the low and off oversold territory. The longer the shares stay above 11.5 pence, the floor of the gap, the greater the chance of a move towards the recent peak there around 20 pence, and we're looking for that as soon as the end of this month. It's interesting that the shares did manage to hit their previous targets towards 24 and 25 pence twice before the rug was pulled rather painfully. Next up, Mila, or Mila, whatever you want to call it. Here we've got a situation where we've broken out of this falling wedge. We've broken out or above the 50-day moving average at 0.85 pence. Looking for an initial move up to 1.1 pence, maybe as soon as the end of this month, and then 1.4, hopefully by the end of next month. Obviously, no fresh lows below 0.8 are wanted there. On to Marula, which is worth a revisit, but also we've had an unfilled gap to the upside, a bear trap gap reversal from below the late November support around 11.6 pence. Above that, we've been looking for a March resistance line projection up to 18 pence to be hit as soon as the end of next month, or hopefully a bit sooner, given that we're just about to be delivered a golden cross between the 50 and 200-day moving averages. It looks as though the technicals may be as golden as the fundamentals on that company. On to Pantheon Resources, which has been on the back foot for, basically since early autumn. Here we've had an unfilled gap to the upside through a falling wedge, which tends to be a good and reliable signal. End of day close above 19 pence, and that September resistance line could take us up to 26 pence as soon as the end of this month, or maybe going into January, with the key here, no new lows below 16 pence on Pantheon. Don't normally cover Pan-African, but looks as though the setup here is of interest, and it is of note. We've got a rising 200-day moving average at 15 pence, and a sharply rising 50-day moving average at 16 pence. Above the 200-day line at 15, we're looking for the shares to hit the top of that rising trend channel from the end of last year, as high as 22 or 23 pence by the end of next month. If you're cautious, you might just want to see the shares clear recent resistance around 17 pence before deciding that it was safe on that situation. Finishing on with tertiary minerals, which when it moves, it can move well. And here we've got a V-shaped bull flag breakout through the 0.145 level. The initial target here just up to 0.16, but ideally we finally see the shares head up to top of that broadening triangle from the end of last year as high as 0.23 by the end of next month, and ideally a bit sooner than that. That's it from me today. More updates over the weekend.